Tri-Merge Credit Report is a hard credit inquiry used by private lenders to collect FICO credit reports from all three consumer credit bureaus, which include Equifax, Transunion, and Experian. If you are a real estate investor shopping for a DSCR loan or fix and flip loan, understanding the Tri-Merge Credit Report can help you get a lower interest rate and a higher loan amount and avoid stressful situations that are all too common. Private lenders that use Tri-Merge reports will take the mid-score when determining your credit score for underwriting and loan pricing purposes. This means the highest and lowest score will be ignored, and the middle or second highest score will be used. If the report returns only 2 scores, for example, one of your credit bureau accounts is frozen, then the lender will take the lowest score. DSCR loan programs have varying minimum credit score requirements. OfferMarket's DSCR loan program has a minimum credit score of 660, while many other private lenders have a minimum credit score of 680. It's important to understand that as your credit score approaches the program minimum, your interest rate will be progressively higher and your LTV will be progressively lower. A middle credit score of 720 or higher will generally qualify you for the highest LTV and close to the best interest rate. Credit scores below 720 will trap cash in your deal, lowering your cash-on-cash return and increasing your financing costs due to higher interest rate. In the worst-case scenario, we see BRRRR investors forced to either bring cash to closing in order to pay off their fix and flip loan or forced to sell because their credit score is too low to qualify for a DSCR loan. While we specialize in deal structuring and can help you avoid these issues, as the saying goes, an ounce of prevention is worth a pound of cure, and it is absolutely imperative that rental property investors diligently protect their credit score. For this reason, we continually remind clients that a 720 credit score is the magic number. Fix and flip loan programs generally have a much lower minimum credit score. At OfferMarket, we have funded fix and flip loans with credit scores as low as 580. When your credit score is under 620, we will require 6 to 12 months of interest reserved to be funded into escrow at settlement. Instead of making monthly interest payments, your payments will be disbursed from your interest reserve. Any unused funds in your interest reserve will be applied towards your payoff when the property is sold. If your exit strategy is to refinance from our fix and flip loan into our DSCR loan, then we will want to see a minimum credit score of 660. Your free credit report will likely use the FICO 8 scoring model, which tends to have a lower sensitivity to one-time late payments, and therefore a higher score compared to the other, older scoring models that are used in Tri-Merge credit reports. While FICO Score 8, otherwise known as FICO 8 or FICO Classic V8, is the most commonly used credit scoring model, it is actually the least commonly used scoring model for mortgage inquiries. This unfortunate truth is the cause of a lot of frustration among borrowers who are surprised to find that their Tri-Merge report mid-score is significantly lower than the FICO 8 free credit report score they just checked before proceeding with the loan. Tri-Merge vendors, including CIC Credit and Exactus Credit Plus, use a mix of FICO scoring models, including FICO 8, FICO Classic V5, FICO Classic 04, and Fair Isaac version 2. While most private lenders do not charge for Tri-Merge reports, it can cost anywhere from $20 to $50 for a Tri-Merge report. In order for a lender to run a Tri-Merge credit report, they must first receive your express written consent. This is typically obtained through a credit release authorization that you e-sign. Most credit release authorizations will also include authorization to run your background report. A Tri-Merge report is a hard inquiry across all three credit bureaus. For this reason, it is important to avoid excessive or unnecessary Tri-Merge reports because one of the factors in the FICO scoring model is the number of inquiries. A high number of inquiries is looked at as a credit risk by FICO and the credit bureaus and will result in a reduction to your credit score. Technically, your lender is not required to provide you with the Tri-Merge report that you authorized and possibly paid for. At OfferMarket, we believe it's important that you have total transparency into your credit report, and we make the Tri-Merge report available immediately in your loan file. Your OfferMarket relationship manager is always happy to review your tri-merge report with you, so you understand the items on your report that you can resolve in order to increase your credit score and access better loan terms. Many lenders will not fund a loan if the tri-merge report is older than 90. Other lenders will allow the report to be up to 120 days old. Few lenders will allow the report to be up to 365 days old. Many lenders require the tri-merge report to be run through their vendor account and will therefore not accept a tri-merge report from another lender. One reason for this common policy is because of forged reports, though tri-merge vendors have a secure verification URL that the lender can use to confirm that the PDF report has not been tampered with. At OfferMarket, we want to avoid unnecessary inquiries on your credit. We will allow you to transfer your tri-merge report whenever possible, as long as the following conditions are met. The report is from an approved tri-merge vendor. The report is not older than 90 days as of the closing date. Our institutional investor that will be purchasing the loan does not have a strict policy against tri-merge report transfer. Thank you for watching this video. We hope you found it helpful. Our mission is to help you build wealth through real estate, and we look forward to funding your next transaction. For instant loan quotes and pre-approval, visit offermarket.us/loans.